Good evening, friends. How are you doing? Should we start? Okay, let's start first session. Okay, sorry about that slight glitch. Let's start this now. I think it's working well. Okay, before we start, guys, how many of you have done either of the part? Let's say part 1 or not the part 3, or let's say have you attended the previous part 2 class? How many of you attended the previous any of the classes? Part 1, Puneet. Okay, part 1, part 3. Sure, Anjali. Part 1 and part 3. Okay. Everyone would be helpful if you can respond to that. Sure. So that's your first session, Chandana, right? Okay, perfect. So Anjali and Chandana, you are the first time you're attending this. Rest everyone, Aravind, you have done third. Simran, you have done first and 3. Ankita, you have done first and 3. Sanket, you have done all the sessions, I guess, earlier. Okay. One thing, Oppo F9 F Pro, please change your name, guys. So it's write your first name or second name, whatever you want to write it, but please write your name. Okay, change your name. Okay, perfect. How many of you are have studied the taxation, maybe at the CA inter level or at the CA final level? Sure. Or at the college level or any other qualification? Everyone, how many of you done this? Sure. Sure, Niraj. Perfect. Perfect. So I'll go a little slow, guys. Though the first topic which I'll start today is going to be very important and it's going to be a little tricky also. But don't worry, I'll go very slow. I'll go try to cover as basics as possible. But at any point of time, if you face any problem, any challenge, feel free to ask that. Okay. All right. I'll start the part 2. What is the part 2? Part 2 is basically the businesses. Basically the business entities. We are going to discuss the various business entities in that case. Okay, before I just move to that, which kind of taxation are we going to study? Are we going to study the sales tax? Are we going to study the VAT? Are we going to study what tax are we going to study? Federal tax. So basically we are going to discuss the income tax, and very specifically we are going to discuss the federal income tax. So we are going to discuss income tax. That means whatever the income which is getting generated on which you are paying the tax. In US, even the income tax has a variety of it. For example, federal income tax, which is more like a center inter tax, right? Then we are having the state income tax, and then we are having a local income tax also. It's not the part of our curriculum because that is something which is not the purview of the IRS. It's having own authorities in that case. So we are not going to discuss the state income tax or the local income tax. Moreover, US has almost 50 states and so many cities, counties, cities almost in that case, not humanly possible for you to learn everything in that case. So what we are going to focus, federal income tax. Though in the part 1, we are also going to discuss gift tax, state tax. These are the few additional, all social security tax, basically the self-employment tax. All these taxes we are going to discuss in addition to the federal income tax. In addition to the federal income tax, these are already the other taxes we are going to cover. Okay. Now, if I go back and start with the business entities, how many types of broadly the business entities are in US? business entities could be classified into two categories, right? First is going to be double tax entities, and second is going to be pass-through entities. Second is going to be pass-through entities. Double taxed entities and pass-through entity. It's a very broad classification of the entities, but these are the two major types of entities we are going to discuss. Okay, we are not going to discuss the individual taxation because that is something we will discuss in part 1. We are not going to discuss when you're representing your client, what are the things you have to look into that. That is something we will discuss in the part 3. Here we will discuss about the taxation of a businesses in that case. Though here I will discuss with you the shareholder treatments also. That's a different point. But majorly we are going to discuss the business treatment. Business entities could be classified, as I discussed, two categories. First is going to be the pass-through entity, and second is going to be double tax entities in that case. Okay. Before I just move, guys, one quick point. During our 25-30 classes, I'll keep making the notes, guys. So I would suggest, guys, that you make a register. This is especially for the new people. Please make the register, or if you don't want to make a register, please start taking the screenshots of whatever I'm noting it, because your sergeant book is very complicatedly written and you're not supposed to learn the book also, which is a good thing. So please make the notes, and this is something which is going to be very, very helpful for you. So that's my 2 cents for you, that please make the notes, and the best way is to make the register. If possible, I think that would be the very, very helpful thing. So whatever I'm noting, whatever I'm writing, you guys can take a note of that. Would be very, very helpful. Okay. Coming back, double tax entities and the pass-through entities. Let's understand the meaning of double tax entities. Double taxed entities, the name says it. That means the tax is going to be levied at the 2 level. Let's say this is the company. Company is having a P&L. It is having sales, cost. This is the PBT on which you are paying the tax, and whatever is left, PAT, this will go to shareholder, and now the shareholder will pay the tax on it, because for the shareholder it is the dividend and the shareholder will pay the tax on it. So this is tax number 1. This is going to be tax number 2. That's why it is called double tax. Okay, I understand. You will say there are different 2 people. One is the company, and second is the shareholder. But the IRS consider them as the double taxation only. That the tax is levied on the same income twice in that case. Okay, what is IRS? IRS, Internal Revenue Service. It is the central authority which will take care of all the tax methods, especially federal tax matters. So your exam, which is also enrolled agent exam, is conducted by the IRS. So with that, you are eligible you will get the license to practice before the IRS in that case. So that is the meaning of IRS. The way it's the central authority, the way we are having CVDT in India, similarly it is IRS. Up till here, anyone, any doubt, please ask. No? Okay. That's a pass-through, that's a double tax entity, guys. Let's understand pass-through entities. Pass-through entities. That means this is the company. It is having sales, cost, PBT. Now, it will not pay the tax. This company is not going to pay the tax. It will give everything to its shareholders. And now the shareholders will pay the tax on it. How many taxes are getting levied in this scenario, guys? How many taxes are getting levied in this case? Only one, right? Only one tax is levied in that case. That is why it is called the pass-through. Pass-through means you're just giving everything. You're just passing on everything. pass through. So you're passing your losses also, you're passing your gains also. Every item you're just passing. That's why pass through. Pass through entity and the double tax entity. For example, C corporation, guys, is known as double tax entity. Pass through entity, S corporation, partnership firm, these are known as pass through entities. So S corporation, we have done this. C corporation is, I've just discussed that here only, Sanket. Okay, why such a weird name? C corporation, S corporation. Is it small organization? Is it the closely held company? Okay. The way we are having Income Tax Act 1961 in India, which will decide your taxes. Similarly, in US, we are having IRC, Internal Revenue Code. Are you aware, guys, if you're taking any deduction, let's say ATC deduction, ATD deduction, under which chapter these deductions comes in India? Chapter 6A, correct? Chapter 6A. That's why we call them also as a deduction under chapter 6A. Similarly, the C corporation, if I talk about C corporation, they are governed by subchapter C. C corporation is governed by subchapter C. That's why we call it the C corporation. Similarly, S corporation is going to be governed by subchapter S. That's why S corporation. Similarly, partnership firms also, guys, they are governed by subchapter K, but we don't call them K corporation. We still call them the partnerships. Are we clear why are we naming C corporation as corporation? Yes, no, maybe. Any doubt, guys, up till here, especially for the first time, people who are doing it? At any point of time, you find it is becoming a little over the head, you're not able to understand, please tell me. Okay. Now, the topic I will start is very important topic. Definitely, you will get 1 or 2 questions on that. In fact, much more than questions on that. So we'll understand it slow. For partnership, it is going to be subchapter K. Okay, so definitely you'll get some questions on this topic, guys, what we are starting. And not only that, guys, this chapter is going to be the base for many chapters also. For example, S corporation. If you have understood this, the entire S corporation is just going to be a plain vanilla. But if you have not understood this, that is also going to be difficult. I'll go very slow in that case. It is very different what we understand in India. You will find it so weird also that what are we doing in that case, but don't worry. We'll do it slow, you'll understand that, don't worry. The topic, I'm built up so much. The topic we'll start is going to be corporate distributions. Corporate distribution. Corporate distribution, that means company is giving the distribution to the shareholder. Company is making the distribution to the shareholder. Mind it, guys, distribution is not equal to dividend here. Distribution is not equal to dividend in that case. That means if the company is making the distribution, let's say $100, this is not going to be dividend. Some portion in that, I'm not saying some portion in that case, maybe let's say 20, it could be dividend. Rest of the 80 may not be dividend. How will we determine that? I'll come to that only. But entire distribution, first of all, is not going to be dividend. In that case, some portion is going to be dividend. Rest may not be the dividend. How we will determine everything, we'll discuss. Don't worry on that. But what I'm trying to tell you, whenever it is a distribution case, don't get confused that it is going to be dividend in that case. Okay. Before I move, guys, I just want to discuss for the new students what is the meaning. There is a concept which we are going to use a lot, which is basis. What is basis, guys? Any old student want to explain me what is basis? Not only the share purchase cost, precisely, Ankita, any cost, owner's cost in that case, cost of acquisition, net book value, right? Any cost basically. In a very simple terms, it means the cost. So we will not use the cost from going forward or the cost of acquisition the way we use in India. We will use the cost. We will use the basis in that case. For example, let's say if you are purchasing Amazon stock, you are purchasing 100 stocks of Amazon at the rate $10 per share. What is going to be your total basis? Correct, $1,000. Excellent. This is going to be $1,000. I have a question here, guys. Can your basis be negative? Can this basis be negative? No, this can never be negative. So first point I'm writing here, first note I'm writing here, basis can never be negative. Even if it is a stock dividend, guys, still, that means even if the company is giving you bonus shares, still not negative. No, still the value might be zero, but it will not be negative in that case. That will be not negative in that case. Perfect. So you are saying, guys, basis is 1,000. Let's say I'm telling you, you are selling these shares. You are selling these shares for $1,000, guys. In that case, what is going to be your capital gains? Let's say the buyer who is purchasing from you, that was very kind hearted, and that person gives you, let's say, $20 more. That person give you 20 more. In that case, what is going to be capital gains? Correct. Then the profit capital gain is going to be 20. Absolutely. So can I say, guys, in this case, once you recover your basis, once your basis becomes zero, anything on the top of it is going to be your capital gains. Is it correct? Your basis has made it zero. Once you recover your basis, anything on the top of it is going to be capital gains. Is it clear, guys? Your basis was 1,000 and you recovered that. After that, whatever you're receiving, for example, if I tell you the person is giving now giving you $50 more, then again your basis is going, now gains is going to be $70 in that case. So that means once you recover your basis, anything on the top of it is going to be capital gains. For example, let's see. So that means if this is your basis, let's say 1,000, and this is going to be your selling price, let's say 1,200. $200 is going to be your capital gains. That means once you recover this portion automatically will be capital gains. That's it. Okay, I'm writing this as a note also, guys, here. That's a first note. Second note I'm writing here. Once basis becomes zero, anything over and above shall be capital gains. Whenever you're done. Done, guys? Sure. How basis becomes zero? Sure. So what I'm saying, Anjali, in this case, let's say your basis is 1500. Okay. You purchase shares of Tesla for $1,500 and you sold the, let's say this is you have purchased and the person is paying you, let's say 1500. This is your selling price. This is your selling price. So what is going to be your gains, Anjali, in this case? Selling price is 1500, right? Selling price is 1500. Your basis, that means your cost, your selling price is also 1500, your cost is also 1500. How much is your gains? Zero. Is that okay? Is that okay, Anjali, up till here? Now let's say you're, now I'm saying it is zero now, but let's say the person is giving you more money. Now it is zero. If the person is giving you more money, let's say hypothetically person is not giving 1500, person is giving you, let's say 1600. So in that case, what is going to be your gains? What is going to be your gains? $100, right? $100 is going to be your gain in that case. That means this is your basis. How much is the basis? Basis is 1500. This is your selling price. Selling price is 1600. So once it reaches here, that means once you recover this, anything on the top of it is going to be capital gains. Is it not clear? It's okay. I'll repeat this. Don't worry. Anyone, any doubt up till here, please ask, guys. Feel free to ask any questions. Because this is important. If you don't ask this question, it's going to be a little difficult. Perfect. Let's move. Okay, let's talk about the company distribution again, corporate distribution again. Let's say company is making the distribution to the shareholder. Now I'm talking about C corporation, guys. I'm not talking about S corporation. I'm talking about C corporation. When I say C corporation, guys, is it double tax entity or is it pass-through entity? It's a double tax entity. It's a double tax entity. Correct. 2T. Yes, it's a double tax entity is in that case. So that means first the tax company would have paid. Now the shareholder is going to pay the tax on that. Is the distribution equals to dividend? No, we discussed it is not exactly the dividend in that case. So whenever the company is making the distribution to the shareholder, guys, whenever the company here earnings and profits. What is company's current year's earnings and profits? That means what is current year earnings and profit? Let's say company is making the distribution in the year 2020. Okay, we are going to look what is the company's profits or losses, could be anything, in the current year. Current year, how much is the current year you are having profit or loss in that case? That is the meaning of current year's earnings and profits. That's the first thing you're going to look in that case. I'm writing it here in the short CYEP. Second thing you are going to look in that case, what is your accumulated profit? accumulated earnings and profits. Let's call it AEP. That means over how many years, whatever the company is running, whatever is your accumulated earnings and profit. So that means what is your accumulated earnings and profit over so many previous in that case. This is the second thing we are going to look in that case. Third thing, what are we going to look the third thing in this case? What is the basis? Basis for whom? We will look in this case, what is the stock basis? That means at what price the shareholder has purchased the share. What is the shareholder's basis? That's the third thing in that case. This is the third thing in that case. These are the waterfall. This is the sequence we are going to follow in this case, guys. Whenever the company is making the distribution, we are going to follow this sequence. First, we are going to look what is current year's earnings and profits. Second, what is accumulated earnings and profits. Third, what is the basis in that case. Okay, let's see this one question. Let's say company is making the distribution, guys, here $1,000. Okay, company's current year earnings and profit is, let's say, $100. Accumulated earnings and profit is, let's say, $200. Shareholders basis is, let's say, $400. Let's allocate. What is the first thing, guys, I should do this? What is the first thing I should keep? What value should I write first here? Current year. Good, Aravind. So here it is going to be $100. Second is going to be AEP, which is going to be 200. Third is going to be basis, which is 400. How much is left? $300 is left. So what are we doing, guys? Please understand here. We are saying this is your distribution of 1,000. First, we were allocating to the current year. Second, we are allocating to the accumulated. Third, we are allocating whatever is your basis. That means we are assuming, okay, let's stop it up till three only. I'll come back to that later. Now, question is what we discussed earlier. Out of all of it, what is your dividend? Dividend is going to be, guys, whatever is going to be the value of 1 and 2. Whatever is going to be the value of 1 and 2, that is going to be your dividend in that case. How much is the dividend in this case, guys? Correct. $300 is going to be dividend in that case. Is it going to be taxable? Yes. On whom? Company or shareholder? Company has already paid the taxes. Company will not pay the dividend tax. Company will pay the normal tax, business tax in that case, right? But the tax on the dividend is going to be paid by the shareholder only. Is that clear what I'm saying, guys? Company has already paid on this 1,000. Company has already paid the tax on this entire 1,000. Am I clear, guys, with this point? Company has already paid the tax on that 1,000, right? So now the shareholder will pay the dividend on this. Now, so what are we assuming this, guys? What does this waterfall means in that case? That means company is giving 1,000. We are saying $300 is going to be 300 company is giving you because of the dividend. 400 company is giving because whatever is your basis, company is paying you that amount also. That means after that, how much is going to be your basis? Basis will become 0 because company has repaid your basis. Company has repaid your basis. That means what is left after this? Left basis is going to be 0 in that case. Once your basis becomes 0, guys, anything on the top of it, what do we call that? See the note number 2. Precisely, capital gains. So whatever is left, we call it capital gains. I know sounds very, very confusing, but if you see the law is very complicated. I just try to make it more of a flow chart and waterfall so that you will retain it much better. So this is the waterfall, guys, we are going to always follow. This is the waterfall we are going to always follow in this case. quickly note this. I'm just opening your book. Let's read it from there also. Done, guys? Okay. Is capital gain going to be taxable? Answer is yes. This is also going to be taxable. In whose hands? Company's hands or the shareholders' hand? Shareholders' hand. Shareholders' hand. This is also going to be taxable in the shareholders' hand. Okay. Let's understand the process, guys. First, I'll explain it to you one more time. Don't worry on this. Let's understand this, guys. Let's say, guys, current year's earnings and profits is 10,000. Accumulated earnings and profits is, let's say, 5,000. Shareholders basis is going to be 8,000. Guys, when I say shareholders basis of what? Basis of what am I talking about? Precisely. Very good, guys. Just keep this in your mind, because maybe by tomorrow I will tell you 4 more bases, right? Then you will get confused. So be careful in that case. We are talking about the basis of the shares which the shareholder is owning in that case. Be careful on that. So yes, you're absolutely correct. This is a basis of the shares or the stocks which the shareholder is owning. Perfect. Precisely. Whatever is the cost you paid for purchasing those shares in that case. Absolutely. Now, let's do the various scenario, guys. Let's say the distribution. I'm writing here distribution. First scenario, it is $15,000. What is the first thing, guys? You can write in the short. What is the first thing we are looking in the waterfall? Current year earnings and profit. So I'm writing here current year's earnings and profit. Second is accumulated earnings and profit. Third is going to be basis, basically the return of basis. Lastly, it is going to be capital gains. I'll do few questions with you. Okay, everyone, please pay attention. Distribution is $15,000, guys. What is my current year's earnings and profit in this scenario? 10,000. So I will write here 10,000, guys. I will write here 10,000. Can I not write 15,000? No, you cannot write 15,000 because your current year is only 10,000. So it is going to be 10,000 only. Okay. Out of 15,000, guys, out of 15,000 distribution, 10,000 is gone. How much is left? 5,000 is left. 5,000 is left. Now 5,000 will go to second in the sequence, which is AEP, accumulated earnings and profit. How much should I write in the accumulated earnings and profits? 5,000, right? Entire 5,000 I will write in that case. Should I write anything in the basis? Should I write anything in the basis, guys? Should I write 8,000? No, I will not write this, guys. Reason being, my distribution amount is exhausted. It is exhausted. When it is exhausted, how can I write this? No, you will not write this. What is going to be capital gains? This is 0. That's why basis is going to be 0 here. Capital gains also going to be 0 in that case, because when there is nothing in the basis, capital gains will also be 0 in that case. Let's do more. Don't worry, you'll be very clear on that. Let's see. Distribution is second scenario, guys. I'm talking about the various scenarios in that case. Okay. Now the distribution amount is not 15,000. Distribution amount is 20,000, guys. What is the first thing? Current year's earnings and profit. Let's write this. 10,000. Out of 20,000, 10,000 is gone. How much is left? Everyone, how much is left? 10,000 is left. What is the second thing we allocate? We allocate accumulated earnings and profit. How much is accumulated earnings and profits for you? 5,000, correct? So I can I not write 10,000 here? Can I not write 10,000? No, I can't write that. As you say, I'm writing here 5,000. So out of 20,000, 10,000 is gone, 5,000 is gone, 5,000 is left in that case. What should I, how much should I write in the basis? Should I write 8,000 or 5,000, guys? 5,000. Very nice. Very, very nice. 5,000. You can't exceed the distribution amount. You're not going to exceed the distribution amount. You are going to be within the distribution amount. In that case, 5,000. What is going to be capital gains? 0. It is going to be 0 in that case. Ankita, is that okay? Everyone, anyone, any doubt, please ask me. Up till here, any doubt, any guys, any question? Let's try one more. 25,000 guys. Let's see. Now the distribution is not 15, 20, 25,000. What is going to be current year's earnings and profit? Same. I cannot exceed that. 10,000. AEP 5,000. Basis 5,000. 10,000. Not 10,000. No. 8,000. Anything on the top of it will go to capital gains. How much will go to capital gains? 2,000. Absolutely correct. Anyone, any doubt? Anjali, is that clear? Neeraj? Puneet? Okay. Let's see one more. Let's see. It is going to be 30,000. Quickly tell me what is going to be capital gains. Correct? 10,000, 5,000, 8,000. And this is going to be 7,000. Very nice. Last one. Let's see, 100,000. What is going to be capital gains? Correct. 77,000. So this is going to be 10,000, 5,000, 8,000, and you're right, 77,000. In this question, guys, if I ask you, in this question, if I ask you, in the scenario 5, what is your taxable dividend? Correct. That means whatever is the current year or AEP, whatever is the current year or AEP, that will be 15,000. You're absolutely correct. Guys, what is going to be taxable dividend in the first scenario? 15,000. Same. That will not change. In fact, if you're right, in all the 5 scenarios, this is going to be exactly the same. Perfect. Let's quickly try one more question, and this you will try on your own. Current year's E&P, accumulated E&P. Yes, Sanket. So automatically, obviously, the capital gains, everything is going to be taxable, all the scenarios. Yeah, that's capital gains. But I was asking the taxable dividend. Yes, everything is going to be taxable, Sanket, in the hands. We are just discussing about the shareholder only. I'm not discussing anything till now in the hands of company. Okay. Let's say current year's earnings and profits, accumulated earnings and profits, and basis. All the 3 are 5,000 each. That means current year 5,000, accumulated 5,000, basis 5,000. All 3 is 5,000. Let's see few scenario. First, second, third, fourth, Fifth, I'm telling you the distribution amount, guys. Distribution amount is 15,000, 20,000, 30,000, 35,000 and 100,000. Just tell me what is going to be capital gains in all the 5 scenario. Please tell me all in one go. Type in one, Sanket, else your chat will move. Okay, perfect. Let's see. 0, 15, 20, 25, everyone is getting. Hopefully it is correct. So yes, 555. So it is going to be 0, correct. 555. So this is going to be 5,000, correct. 555. So 15 is correct. 555, 20 is correct. 555, 85 is correct. Excellent. I hope the process is clear. Now let's read it from the book. You will understand why are we doing this waterfall. Everyone got the book? Sure, Chandan, does not matter. You will realize in some couple of days, you will not need it at all. Don't worry. I'll just open the relevant portion for you. Okay, guys, I am on page number 53. Just read the relevant portion here only. Now you will understand why are we following this waterfall. This is what the law says. Obviously, law will not tell you the waterfall and everything. This is something I have made on my own. But now you will understand why are we doing this. Please read and confirm once you're done. whenever you're done. So it's the same thing, guys. If you see, a dividend generally refers to any distribution of the property out of the corporation's E&P. The assumption is that any distribution made by the corporation with respect to its stock is deemed first to be the corporation of earnings and profit to the extent thereof. That means up till how much is 1 and 2 you are having, that would be profit. As long as corporation has E&P, distribution is going to be taxable. That's what we discussed. First and 2, we saying this is going to be taxable dividend. Amount not considered dividend because of the absence of the E&P, because you don't have in this case. For example, in our case, it was 10,000 and 5,000 are considered to be non-taxable return of capital. So that means we discussed third point is going to be basis for you, which is going to be non-taxable to the extent of the basis. In that case, if the distribution exceeds the shareholders' basis, the excess is treated as the gain on the sale of the stock. Generally, it is the capital gains. Do we need to learn the language? Absolutely not. As far as you are learning the steps, as far as you remember what is 1, 2, 3, 4, current year, accumulated, return of the basis, and the capital gains, we are good to go. There is not even a single question you will not be able to crack that. Is that okay? Shall I move? Okay, let's try a few more questions. Let's see, everyone. Let's say current year's earnings and profits. I'll keep on using this current year's E&P, AEP. So don't get confused. Now you very well understand what do I mean by that. So current year earnings and profit is, let's say, 2000. Accumulated earnings and profit is 0. And basis is going to be $5,000, guys. Distribution which the company is making is going to be 20,000. What is going to be capital gains? Try, everyone. Follow the same. Don't do or orally. Try the same for sequence. 1, 2, 3, 4. 13,000. Okay. Till now, anyone who has not cleared the process, anything, please ping me. I'll take care of that. But please ask me, guys. I will not be able to gauge on my own. So till the time you don't ask me, I will not get to know. Excellent, Ankita. 13,000 is going to be capital gains, and how much? What is going to be dividend? 2,000 is going to be dividend. Correct. Okay. Okay. Please help me out. What is the value of first I should write? $2,000. Correct. What is the value of second? 0. What is the value of 3? 5,000. What is the value of 4? You're right. This is going to be 13,000. This is going to be 2,000, which is taxable dividend. This is going to be taxable capital gains. What is the meaning of 5,000? Let's understand this. Guys, I hope this example is clear. Everyone? Okay. Now, let's understand the meaning of basis when we are saying third point is basis. Basically, what we are saying in this case, when the company is giving that means company is returning your basis. In a way, broadly, you can say is like a buyback. It's more alike buyback. But it is not buyback. Okay. In the buyback, what happens? In the buyback, does your shares remains with you? In the buyback, after the buyback, does the shares remains with you? No. You give your shares to the company, right? You give your shares to the company. But that's why I'm saying this is not exactly like the buyback. Reason being, what is happening in this case? Company is giving the money for your basis. That means company is returning basis. That's why it's called return of basis. But are you giving your shares? No, absolutely not. You're not going your share. You're not giving your shares. That is why return of basis is not going to be taxable. It is something which is not taxable. It is something which is not taxable. So if you see in our all the steps, whatever the waterfall we are following in this case, first is current year's earnings and profit. Second is accumulated earnings and profit. Third is return of basis. Fourth is going to be capital gains. The treatment is going to be these two. These two are going to be taxable dividend. This is going to be taxable capital gains, but this is going to be non-taxable. This is going to be non-taxable in that case. Sequence is going to be very crucial, guys. This sequence is very crucial. Please learn this. I don't think now there is anything left to learn in this case. Already you have understood that. Just quickly make a note, because sometimes in your MCQs, they will try to confuse you with a different language. They might say reduction of basis, or they might say reduction of capital, return of basis, return of capital. Okay, guys, it is return of. I'm not talking about return on capital. I'm not talking about ROIC. I'm not talking about ROC. I'm talking about return of basis. That means they are returning your capital in that case. Last is going to be non-taxable distribution. Everything, all the 3 points which I just mentioned here, it's the same thing. It is nothing. They are talking about step number 3, which is this. So they might, rather than giving you, they might be telling you the return of basis, reduction of the basis, capital, non-taxable distribution. It is having the same meaning. No difference. It's just the same meaning. Is that okay? Okay. Now, let's see. If a company is having current year's earnings and profits, let's say 0. Accumulated earnings and profit is 0. Company is making the distribution, let's say $100. Shareholder is having the basis of 10. What is going to be capital gains? Excellent, guys. Excellent. 90 in this case, right? Because first is going to be 0, second is going to be 0, third is going to be 10, and fourth, which is capital gains, is going to be 90. Now I'll address few questions which might be popping in your head. How can you give this? How can you give the distribution when you're having no profits? First of all, that's none of our concern. But second, also, whenever we think about the companies, guys, it comes to our mind a very public, large listed company. No, it could be the case that this is C corporation, and in this you are the only shareholder. That can very well be the cases in that case. So it could be the chances that you don't have the profits, still you're getting the distribution also. And also see the impact, guys. If let's say there are profit right now, how much is going to be taxable for shareholder? What is going to be the tax amount for the shareholder? $90, right? The shareholder is going to pay tax on $90, right? Is this correct? Neeraj, is that okay? Shareholder will pay the tax on the capital gains on $90. Okay, let's see. Now I'm just changing the scenario. I'm writing here, let's say values here also here. Let's say this is 60. This is also 60. In that case, guys, what is going to be 1, 2, 3, 4? What is going to value first? 60. What is going to be value of second? 40. Correct. This is third is going to be 0, and capital gain is going to be 0 in that case. Again, you are paying the taxes on that case, right? Okay, here it's I've considered here. Okay, let's go back to, sorry. Here I've actually reduced this basis. If guys, I'm saying in this case, guys, previous case, sorry. Previous case, let's say basis is also 0. What is going to be capital gains? 100. You will pay the tax on 100, right? You will pay the tax on $100, right? Similarly, let's say basis here is also 0. Again, you will pay the tax on $100 only, because this is going to be taxable dividend. Impact is going to be nothing, guys. For the shareholder, impact is not going to be anything, because in the previous case, when you don't have the profits, you were paying the capital gains, and now you are paying the taxable dividend in that case. Is that okay? So don't worry and don't confuse with that it is 0. Why is it happening? I'm just telling you, generally it will not matter to our questions or anything. It will not matter. Generally, when you're studying on your own, it should not bother you. That's why I'm just telling you. Okay. Up till now, guys, whatever the scenario we discussed, we said current years and accumulated. Okay, before I just move, guys, I just want to tell you one thing, guys. In this sequence, 1, 2, 3, 4. In the fourth sequence, what is fourth? Capital gains. Capital gains. Think carefully and answer me. Is it possible for you to have a capital loss here? Yes. Okay, let's see. Two years rest. Think a minute. Yes. Neeraj, no. 0, you're saying capital loss will be 0. Okay. Let's see one question here. Company is having current year's earnings and profits, let's say 10. Accumulated earnings and profit is, let's say, 20. It is making the distribution is $100. Basis is, let's say, $5. Everyone, what is going to be capital gains? Sanket, what is going to be capital gains? $65 is going to be capital gains. Correct. Okay. So in this case, we were saying that can it be the capital loss? Let's do one thing. Let's reduce the distribution amount. Let's say distribution is 20. Now will you have a capital loss here? No. Correct. You will not have a capital gains in that case. This is going to be 10. This is going to be 10. And eventually this is going to be 0. Please tell me how it is going to be capital gains. Sanket, capital loss. What should I do? What should I change so that there would be capital loss? Nothing. There will not be a capital loss. There would not be a capital loss here. Should I make 40? Distribution 40, Sanket? Okay, let's do it for Sanket. Let's make it 40, guys. What is going to be capital loss if it is coming? Or capital gains? Is it capital loss coming? $5? No, it is going to be capital gains. Okay, 30. Let's do it one more time for Sanket. 30, guys. How much is going to be capital gains, capital loss? It is going to be 0. You tell me figure. That's what I'm saying. Actually, you were trying to say F1 plus basis is going to be. So this is exactly the scenario, Sanket. 30, you have done the same, right? And in fact, I've done the same in the 20 also, isn't it? The value which you gave 30, it's exactly the same only, Sanket. And the value which I took 20 also, it is the same only. There will not be capital loss, guys. There will not be capital loss. Not possible. No matter how many permutation combination you want, there will not be a capital loss in this case. Now that sounds weird. Why there is not going to be capital loss? See, the steps are designed like that. That means what are we doing? We are not, are we selling the stock, guys? Are we selling the stock? No, we are not selling it. Exactly. Good point. When we are actually selling it, then you will have a capital loss. Right now, you're not selling it. Right now, what we are doing it, we are just distributing. In that case, we are saying how much is going to be taxable dividend, how much is going to be capital gain, how much is going to be your return of basis. That's all. So automatically capital loss will not happen. You're absolutely on point. Whenever you're selling the stock, then you will have a capital loss. This could be very well a MCQ's question. They will give you 3-4 scenarios, and in that case, they will write you capital loss. This is something you have to be careful about. This capital loss is not possible in case of a distribution. This is a trap for you. Okay. So this is what it is. Okay. One more question here. Let's say company is making the distribution here. Current year and accumulated, both are 0. Let's make it simple. Basis is 20. Distribution is 100, guys. Year is 2020. Second, 2021. Again, current year accumulated is 0. Please tell me what is going to be capital gains in 2020. Here the distribution is also $100. $100 in 2020, $100 in 2021 distribution. Both year, current year and accumulated is 0. Basis in the first year is 20. Okay. My question is, what is going to be capital gains in 2020? What is going to be capital gains in 2021? Why, Ankita? You said it correct earlier. You were right earlier. Guys, here, in this case, Aravind, once we are getting this, you're absolutely correct. In this 2020, it is going to be $80. Absolutely correct. But once you recover your basis, right? That means if I start the beginning of the next year, that means if I start the beginning of the next year, 2021, what is my basis? Basis is going to be 0. Basis is going to be 0 because I have already recovered my basis. I have already recovered my basis. That's why it is going to be 0. That's why, Aravind, in this case, my basis is 0 and everything will go to my capital gains, which is $100. Is that okay? So $80 and $100 is absolutely correct. Perfect, perfect, perfect. Let's move. Guys, up till here, any question, please ask. I know this is slightly difficult topic. Ideally, I should not take this topic to the first class, but any doubt, any stupid, any random question which is coming to your mind, anything you want me to repeat? No, are we good? Chandran, do you have any question? Sure, Sanket. Okay, perfect. Let's say current year's earnings and profit. Okay. Can anyone wants to answer that question? What do you think? Sanket's question is the distribution is the expenditure for this? No. Even in India, any company which is giving, let's say, dividend, is it the expenditure for the company? Is it, Sanket? No. It is not. Correct. It's a profit sharing. Correct. It's a profit sharing. Similarly, here also, it's not an expenditure. It is not an expenditure. It is apportionment of the income. It is apportionment of the profit. So it is not. Is it okay? Because if you see the basic nature, so just to answer your point, Sanket, if you are saying if we reduce from the company's profit, it's only applicable for the C corporation. I've already discussed that point. It's only for the C corporation. S corporation is going to be altogether different ball game. Reason being, there they are not going to pay any tax. There the S corporation is not going to pay any tax because it's a pass-through entity. I'll cover that. Let's move. Let's see current year. Up till now, what we discussed, guys, I gave you all the example where the current year earnings and profit and accumulated earnings and profit are either positive or either 0. I have not given you any figure which is negative. Okay, let's see the various scenarios now on that. What is going to be the impact if it is going to be negative in that case? So let's make it if both are positive. If both are positive, guys, in that case, what is the waterfall you are following? What do I mean by I explain that? So for example, if this is the company which is making the distribution, current year is 10, accumulated is 20, distribution is 40, basis is 5. 1, 2, 3, 4. What is the value of 4? 5. So this is going to be 10, this is going to be 20, this is going to be 5, and this is going to be 5. Excellent. Excellent. So that means in a way, I'm following 1, 2, 3, 4. I'm writing here the sequence you are following in this case, the waterfall you are following in this case is going to be 1, 2, 3, 4. The waterfall you are following is 1, 2, 3, 4 in that case. Perfect. Let's see, both are negative. Both are negative, guys. That means same question, but current year, this is negative, this is negative. What is going to be capital gains in that case? What is the value of 0? Should I write -10? Should I write -10? No, 0. 0. See, company will not take money from you. Company is making the distribution. So company will not do that. It is going to be 0. This is going to be 0. This is going to be 5, and you're absolutely correct. This is going to be 35. So practically, guys, in this case, how many steps I'm applying? I'm applying 3 and 4. In this case, what step I'm following? Waterfall in this case, 3 and 4. Is that point clear what I'm saying, guys, with this chart? Is it clear, guys, how we are making this chart? Okay. Now let's see third scenario. This is positive, this is negative. Current year is positive, accumulated is negative. Let's see this also. Current year is positive, guys, and accumulated is negative. First of all, the question will come to your mind. No, wait. Question will come to your mind. Should we adjust that? Answer is no. That means, should I knock it off? No, adjust, we will not do it. Now, please tell me, what is going to be the value of fourth? Do you write, Southwick? 25. You're absolutely correct. 10, 0, 5, 25. Brilliant, guys. Brilliant. Very good. So that means practically what steps we are following in this case? 1, 3, 4. One, 3, 4. Are we adjusting them? Are we netting them off? No. Here there is no question of netting them off. Here there is no question of netting them off. I hope these three scenarios are clear. Why are we not adjusting that, Puneet? Okay, I would come to the fourth step. Then I will, in the fourth step, I'm going to adjust that. Then I'll explain you this point. Let's see the fourth scenario. Fourth scenario is obviously going to be the reverse of that, which is this is negative, this is positive. Are we going to adjust that? Answer is yes. Now, the question automatically comes to your mind, why are we adjusting, not adjusting in the third scenario? Why are we adjusting in the fourth scenario? Please understand this. What is the third scenario? Third scenario is when the current year is positive and accumulated is negative. Distribution you are making in the current year. So that means in the current year, when you are having the profits, and in the current year only you are making the distributions. So it makes sense for us to see that, yes, in the current years, you are having the profit and you're making the distribution. Let's not go back to the previous year because you are having the profit in the current year and you are making the distribution. That's why we are not adjusting that. In the fourth scenario, which is current year accumulated, this is negative, this is positive, but we are adjusting this. Why are we adjusting this? In the current year, you don't have any profits. In the current year, you don't have profit, but still you are making the distribution rather. But still you are making the distribution. So we want to know what is your net position. Do you really have any profits? That's why you're distributing in that case, or you're just giving just like that only. That's why we want to adjust that. Because distribution is something is going to be, because the distribution is something which is going to be done in the current year only. Carry forward, don't adjust my current year. Okay, you're talking about the carry forward of the loss. Understood your point. First of all, Puneet, in this case, in US, we are having both the concept. We are having the concept of the carry forward also and the carry back also. So it's not necessary that you are carrying forward. It could be the scenario that you are carrying back also in that case. Second scenario is this E&P, what we are going to discuss. It is very different from the definition of the retained earnings and the PAT. Though it's very similar, there are some differences in that also. So it's not exactly what we understand from the law perspective. It's very different from what we understand from the US GAAP perspective, which is accounts in that case. It is a different way of calculating the E&P in that case. That's why the adjustment will not happen the way you're saying carry forward. Is that okay? Is it defined by the IRS? What is E&P? No, it's not defined by the IRS in this case, but still we'll discuss what is going to be this. Okay, coming back to the fourth scenario, let's try this. Fourth scenario is current is negative, accumulated is going to be positive. Let's make that scenario. Current is negative, accumulated is positive. Should we adjust everyone? Yes, we are going to adjust them. What is the value coming after adjustment? 10, positive 10, positive 10 in that case. There could be different scenario also, guys. Let's say I'm writing the different scenario. Let's say this is $5. In that case, what is the adjusted value coming? -5. Is that point clear what I'm saying? Okay, ignore this for the time being. It'll unnecessarily confuse you. This is the scenario when the current year is there, negative, and current year is negative and accumulated is 20. In that case, that means it is going to be positive 10. Whenever you are adjusting, guys, here, whenever you are adjusting here, it could be two things. It could be two things in this case. The net amount could be positive. The net amount could be negative. It could be positive or it could be negative. In our scenario, it is coming positive. Whenever it is positive, guys, in that case, what is going to be the values here? This is going to be 0. This is going to be 10. On net amount, you can say net amount is going to be 10. It's one and all the same thing. Basis is going to be 5. How much is left? 15 and 25, right? This is going to be 25. So basically, what are the steps we are following in this case? 3, 4, and net. 2, 3, 4. So what are the steps we are following in case it is positive? It is going to be net, 3, and 4. Is it clear? But let's say if it is negative, this is current year is this, and this is coming $5. Would you adjust this, guys? Would you adjust this? Yes, yes, yes. See, current year is negative and accumulated is that. So we are going to adjust that. Yes. So in this case, what is going to be the waterfall, guys? This is negative, -5 in this case. And this is going to be 0, 0, 5, 35. Absolutely. It is going to be 3 and 4. I know it sounds slightly confusing. Copy this, guys. We'll try some questions. You'll be fine. Don't worry. Okay, everyone, should I repeat this? Any doubt? Let me know. Guys, any questions? Should I repeat this? Not clear? No, all good. Fourth, should I reduce? Should I repeat, Neeraj? Sure, Anjali. I'm glad you guys are asking that. Sure. So up till third, I think there is no problem, right? First is very easy. Second is very easy when both are negative. So first scenario, second scenario, third scenario, fourth scenario. In the fourth scenario, guys, whenever it is current year, how will we retain that? The easy way for us to retaining is distribution you are making in the current year, distribution you are making in the current year. And when you're having the losses in the current year, we are going to adjust that with the accumulated. We are going to adjust that in that case. So at least you will remember that we have to adjust. This is at least you will remember with that. current year profit, current year distribution we make, and in the current year, if you're having the losses, we are going to adjust that. Now, when you're adjusting that, Anjali, Neeraj, in that case, what will happen in this case? There could be two scenarios that the net amount, whatever is left, it could be positive, it could be negative. For example, let's say this is minus 10 and this is plus 50. What is your result coming? Is it coming positive or negative? It is coming positive. It is coming positive 40, right? It is coming positive 40 in this case. Let's see the reverse scenario. Let's say this is minus 10, this is plus 2. What is the result coming? Result coming minus 8. Is that okay up till here? Don't worry about the next steps. Anjali, is that okay up till here? Okay. Now it's very easy. What we discussed, let's say both the scenarios. Current year is, let's say, minus 10. Accumulated is going to be plus 40. Right? So first of all, you have to see this. This is negative. This is positive. How do we remember? Current year, we make the distribution. Current year is coming negative. That means we have to adjust that. That means we have to adjust that. You have to remember this, guys, that you have to adjust that. What is the amount coming after the adjustment? Net 30. Is that okay, Anjali, up till here? Now, distribution. Let's say the distribution amount is guys, $100. Basis is, let's say, $20, guys. 1, 2, 3, 4. What is going to be the value of 1 and 2? Now, if it is the net scenario, guys, we will club them 1 and 2 in this case. And what is the value will be coming here? It would be up to 30 in that case. That means 30 here. What is going to be value here? 20 here. What is going to be capital gains? It is going to be 50 in that case. Is that okay? Rest everything 1, 2, 3, 4, the way you are doing it, everything will work like that only. Everything will work like that. No change in that case. Is that okay? Let's try one more question here. Same scenario, guys, but let's say distribution amount. Same scenario, but let's say the distribution amount is, let's say, $10. What is going to be the value of 1 and 2 common, guys? What is going to be the value here? Correct. That fundamental will remain the same. That means obviously we are not going to write 30 in that case. That basic fundamental, that distribution amount is not going to exceed, that will remain the same. This will be 0. This will be, because distribution is only 10. Is that okay? Any questions, Anjali, Neeraj? Or do one thing, just don't think it is going to be net amount, just think it is going to be 2 in that case. 10 in that case, this is 0. Anjali, should I repeat this if it is not? Okay. Let's do one more question. I'm not happy. Let's do one more. Let's say this is going to be minus 30 and this is going to be 10. Should we adjust them, guys? Should we adjust this? Yes, we are going to adjust that because this is negative. Current year we are making a distribution. Current year is losses. We will adjust that. What is the amount coming after adjustment? Minus 20. If it is minus, in that case, the same sequence will work. 0, 2 is going to be 0, 3 is going to be 20, 4th is going to be 80. If net amount, if you see, Neeraj, if the net amount is coming negative in that case, it is very similar to our second scenario. Where is the second scenario? Which is just 3 and 4. which is exactly 3 and 4 for us. Okay, let's quickly try one question on your own. Distribution amount, guys. Distribution amount is 60,000. Basis is 15,000. Now, current year accumulated in this case, let's say 10 and 10. 1, 2, 3, 4. Please tell me what should I write in the one. Let's do it together. What should I write in the one? 10. Okay. What should I write in 10? Second. 10. Okay. What should I write in 3? 15. What should I write in 4th? 20, 20, 20, it's going to be 25, correct? Excellent. Minus 20, minus 20, minus 40, okay? Minus 20, minus 40. What should I write in the first? 0. Second? 0. Okay. Third? 15. Very nice. Fourth? 45. Good. Excellent. 10 minus 10 minus 40. Everyone, should I adjust? Should I net them off? Should I adjust? No, will not do that because current year is positive. We don't care about the past profits in that case. What is going to be the first? 10. What is second? 0. Third is 15. Capital gains 35. Excellent. Excellent. Minus 20, 10. Should I adjust? Yes. Now tell me what is going to be the value of first? See that again, Agita. No, guys, see that again. Is the net amount coming positive or negative? It is minus 20. Good, Puneet. Net amount is coming negative, right? So it is going to be just like second scenario. So 0, 0, 15, 45. Correct. Just like second scenario. See, just like this scenario. No change. Right? Okay. Let's do one more. Neeraj, is that okay? This scenario? Anjali, Neeraj, is this scenario okay? Minus 20, 40. Should I adjust? Minus 20, 40. Should I adjust, guys? Yes. What is the value of first? 0. Second? 20. Very nice. Third? 15. Fourth is easy. 35, 25, right? Perfect. Are we good, guys? Is that okay? Excellent. Let's move. we'll try one more question and then we'll wrap this topic. Let's say distribution amount is 10,000. Basis is 0. Is it possible that the basis is 0? Yes, possible. It cannot be negative, but 0 is very much possible in that case, right? Okay, let's see various scenario. Current year, accumulated. First scenario, 10, 10. Second scenario, minus 20, minus 40. Third scenario, 10, minus 40. Fourth scenario, minus 20, 10. Fifth scenario, minus 20. You just need to tell me in all the 4, 5 scenario, what is going to be capital gains. Let's stop it here also for the break. Let's catch up at 8:30. We'll start from there. We'll discuss immediately after that what is the capital gains. You give me your answers in the chat only, all the 5 answers in one go. Okay, thank you. Okay, what should be the answer? Correct. Current year or the accumulated earnings are going to be reported as dividend. Yes. Correct. All are correct. Ordinary dividends are the normal dividends. Yes. Capital gain. Yes. Non-taxable distribution. Which step is that, guys? Is it the part of it? Third. Correct. Basis. Correct. That's why B is the answer. Very good. Okay. Try this question. Correct. A distribution from a C corporation to a shareholders cannot be treated as capital loss. Good. How much is going to be dividend? Correct. Whatever is these two amount is going to be dividend. Correct. Okay. This question I have left it, but in this question, guys, this is going to be a distribution, and let's say this is also the distribution. So that means total distribution amount is going to be 80,000. Now, try that question now. Distribution amount is 20 plus 80. What should be the answer? Puneet, you know the answer, but you're missing the question. See the question again. Same mistake you're doing, Ankita. What are they looking, guys? Dividend income. Precisely. A is going to be answer. They are not looking at the distribution amount. They are looking what is going to be your dividend income. Whatever is your accumulated, since it is 0, this is 70,000, 70,000 is going to be dividend income. Perfect. Let's move. Can you please share your answer here? What is the answer for this? Everyone is getting the same answer. Okay, I'll go ahead with what you're saying. Yeah, apparently it looks correct. 0, 10, 0, 10. Last one is going to be also 0 because 10,000 is the distribution. Correct. This is going to be 0. Perfect. I hope it is clear. Shall I move? Negative, positive is clear, guys. Should I move? Okay. Now, let's see something what we have just seen in the question also. It's not necessary that the company is giving only cash. It's not necessary the company is giving only cash. Not necessary. Company could give you any asset also, any other property also in that case. Now, company, whenever it is giving the property, it could be two things in that case. Whatever is the fair market value of the property or the net book value. Which one should we take? You will take fair market value. For the purpose of knowing the distribution, you will take the fair market value. Is that okay? So that means, guys, if the company is giving you, let's say, cash of $100, fair market value of the property is $60, net book value is $40. Can you tell me what is your total distribution amount? Excellent. This plus this, 160. Wonderful. Correct. Let's see. Company is making cash distribution of 100. It is giving the property for which fair market value is $30. Let's say $20. Net book value is $30. Company is having current year's earnings and profit minus 20. Accumulated earnings and profit is going to be plus 60. Basis is 20. What is going to be capital gains? There are two concepts combined in that case. Think carefully and answer. Neeraj, try again. Okay. First of all, guys, what is your distribution value? What is the distribution? 120, correct? This plus this. Excellent. Now, in this case, should I adjust? Should I adjust this? Yes. We are going to adjust because this is negative current year distribution, current year distribution, current year profit. We are going to adjust that. Adjusted amount is coming 40. 1, 2, 3, 4. 0, 40, 20, 60. Very good. I hope it is clear. Shall I move? Let's move. Up till here, guys, up till whatever we discussed now, I was just giving you one distribution amount, right? So for example, in this case also, I was just giving you one distribution amount. That means 120 only. Earlier also, whenever I was just telling you, I was just giving you one distribution amount, right? That means in a year, I was just giving you one distribution amount. It could be anything. But what about that in the year, there are multiple distributions. Let's say quarter basis. Every quarter there is a distribution. Every half year there is a distribution. How we are going to treat that? You'll understand the problem what I'm saying now. So what we are going to discuss now is multiple distributions during the year. Whenever you are having multiple distributions during the year, in this case, current year's earnings and profits, we are going to adjust proportionately. Balance, or I can say accumulated earnings and profits, you are going to adjust chronologically. I'm 100% sure nothing is clear in that case, but let's try one question in that. Let's say current year's earnings and profit is 2000. Accumulated earnings and profit is, let's say, 4000. Basis is 1000, everyone. Distribution amount is, let's say, I'm giving you one amount right now. Let's say $10,000, guys. Quickly tell me what is going to be your capital gains. Excellent. This is going to be 3000. Absolutely correct. But let's say this distribution you are making it's quarterly. It's quarterly. So Q1 2.5, Q2 2.5, Q3 2.5, and Q4 2.5. Let's see how the treatment is going to be. So I'm writing it here, the format, guys. You can follow this. So Q1, Q2, Q3, Q4, and total. So first I'm writing the distribution amount, guys, which is 2500, 2500, 2500, 10,000. What is the first thing you reduce from the distribution, guys? Current year. Current year is 2000. Current year is 2000. Now the question comes, how will I distribute 2000? We will distribute proportionately in that case. So that means how much should I write in every quarter? Everyone, how much should I write in every quarter? 500. 500. Total amount is 2000. So this is current year's earnings and profit. What is left? 2000, 2000, 2000, 2000, and lastly it is going to be 8000. What is the next thing which comes in? Accumulated earnings and profits. Accumulated earnings and profit. How much is the value? This is we have done 4000. Should I do 1000, 1000, 1000? No. It says chronologically. Chronologically. What does that mean? It means I'm not going to distribute 1000, 1000 in this case. First, how much is the value? Value is 4000. First, we are going to finish quarter one. So that means 2000 directly from here, full amount. How much is that? 0. So out of 4000, guys, 2000 is gone. Next is Q2, full amount, 0. Is there any AEP left? Guys, is there any AEP left? No. That means nil. Total is going to be 4000. So this is going to be 2000, 2000, 4000. What is the next thing, guys, after we exhaust AEP? What is the next thing? Basis. How should we adjust basis? Everything after that is going to be chronologically. So basis is going to be 1000 here. The balance is 1000 and 2000. So total is 3000. What is that 3000, guys? What is the 3000 here? Capital gains. It is going to be capital gains, which is exactly you told me also that 3000 is going to be. Answer is going to be the same. Answer is not going to be different. How we treat that, it is going to be different in that case. That's why I was saying this is the only differentiating factor, nothing else. Are we good? Is that okay, everyone? Just follow this format, guys. It is going to be very simple. Okay, let's quickly try one more question. Current year earnings and profit is 15,000. AEP is 10,000. Basis is going to be 2,000. Distribution, you are making it, let's write the full amount, 30,000. What is going to be capital gains? Correct, 3,000. Now, let's say distribution amount is, guys, distribution amount is 4 quarter. That means how much? 7,500 per quarter. Quickly try this. The same approach, guys. With the same approach, try this. Q1, Q2, Q3, Q4 total. So 7,500, 7,500, 7,500. Quickly try this, guys. Done. Let's see it together. We are going to reduce current year's earnings and profit. How much should I reduce every quarter, guys? $3,750. Total is 15,000. Correct. 3,750. 3,750. Total is 15,000. Then it is going to be, this is done. This is 10,000. 10,000 is going to be 3,750. This is 0. 3,750. This is going to be 0. How much should I reduce in the quarter 3, guys? Excellent. 2,500. Whatever is left in that case, that is going to be 1,250. Nil. 3,750. Then the basis is going to be reduced in that case, which is 2,000, 1,250, and 750 in that case. 3,000 is going to be capital gains. Perfect. I'll do one last question with you guys, and I really want you to everyone try on your own. There is a reason I'm saying this. Everyone try this. Current year's earnings and profit, accumulated earnings and profit basis. All the three are 4,000 each. Distribution you are making it is going to be 20,000. How we are making the distribution? Every quarter it is, let's say, 8,000, 8,000, 2,000, 2,000. Please tell me capital gains. Everyone, please try this. This is going to clarify everything. Anyone who has a doubt in this process, please ask me. I'm waiting for your questions. Okay, I got 4,000. Everyone is saying 8,000. Let's see. Okay, help me out the numbers, guys. I'm writing Q1, Q2, Q3, Q4. Okay. Total is going to be this. It's 8,000, 8,000. 2,000, 2,000. Total is how much? 20,000. What amount should I write in the current year's earnings and profit? Per quarter, how much should I write? Correct? Is it correct, guys? Everyone is getting this? Everyone is wrong. Where is the problem? Problem is, we discussed, what did we discuss? We discussed current year's E&P is going to be proportionately, but I hide one information from you. In fact, we have not explicitly discussed about this. Proportionately here is not going to be period wise. It's not going to be period wise, guys. It is going to be amount wise. Amount wise. That means the distribution amount wise. Is that clear? So that means what is going to be the value here? It is going to be 4,000 into 8 divided by 20. 4,000 into 8 divided by 20. 4,000 into 2 divided by 20. 4,000 into 2 divided by 20. Is that point okay? Is that okay? So what is the value coming here? 4,000 into 8 divided by 20. It's 1,600, 1,600, 400, 400. Rest, everything will remain the same. Rest, chronology will remain the same. No catch in that case. The only catch is going to be this only. Are we good, guys? Everyone? Neeraj, Ankita, Puneet? Okay. I'll give you one smaller question. This you have understood, so there's nothing complicated left in this case. Let's do one quickly, one small question here. Current year's E&P is going to be 27,000. Accumulated E&P, guys, is going to be 40,000. Basis is 15,000. Now distribution is happening, guys. Here there is no quarterly distribution. Here it is the half yearly distribution. Half yearly 1, half yearly 2 distribution. Total amount is 90,000. Half yearly is going to be 30,000 and 60,000. So guys, in this case, when you are distributing this current year, you will do it this amount wise. Quickly try. Done, guys. What is the capital gains coming? $8,000. Okay, let's do it together. H1, H2, total 30,000, 60,000, 90,000. Current year's E and P, which is 27,000. Should I do 13.5, 13.5? No. What is the value should I write? We'll do proportionate in that case, right? So it is going to be 9,000 and 18,000. So basically 27 into 30 divided by 90. 27 into 60 divided by 90. Correct. 27,000. 63,000. 21,000. 42,000. This is done. Accumulated is going to be 40,000. How much should I reduce from this? AEP is going to be 21,000. This is 0. This is 19,000. 42 minus 19, 23,000. Basis is already 15,000. So capital gain is going to be 8,000. Correct. I hope it is clear. Okay, let's read it from your book. I am on page number 54, guys. Here they have defined the same. Current year positive, accumulated positive, current year negative, accumulated negative. It's given in a very confused manner, guys. We have already done it. So basically we are talking about this is going to be current year is going to be pro rata basis, accumulated is going to be chronological basis. Similarly, if it is current year negative and it is accumulated negative, we are going to ignore that point. Let's try this. We have already done this question. If you see, same question, we have done it. So 30,000, 60,000, 9,000, and the capital gain is going to be 8,000. Don't worry about the sale, guys. What they are saying is treatment is going to be just like a sale only. That means whenever you sell, what happens? In that case, you have the capital gains only. So it's just the same thing. Don't get confused with that, why the sale is written here. Both the distribution are deemed to consider their allocable share of the current year. The first distribution is going to be 9,000 from the current year, while 18,000 from the current year in that case. So we have done this. It is going to be 9,000 and 18,000. We have done this. Accumulated ENP is going to be on a chronological basis. That means 21,000, sorry, 21,000 and 19,000. As a result, 21,000 of the 40,000 is going to be allocated in this, and the remaining is going to be 19,000 in this case. I hope it is clear, guys. Now, property distributed other than the cash. When the distribution of the property are made which are not cash, what do we consider? Net book value or fair market value? We consider fair market value. Correct. Provides the amount of the distribution is a fair market value. We consider the fair market value in this case. Liability I have not done with you, so liability I'll do with you tomorrow in this case. Okay. We have already discussed, guys, that E and P is something which is not defined, but current year E and P is very similar to PAT. Accumulated earnings and profits are very similar to the retained earnings, but is it exactly equals? No, there are different. See, IRS does not define that. IRS has not defined what is the meaning of E and P. Let's see. In the absence of the statutory definition, Treasury and the court decisions have been primary source of the definition of the E and P. Primary function of the E and P is to provide a measure of what was the corporation can distribute without invading the capital. The standard is the ultimate basis for determining whether the distribution is going to be taxable dividend or the return of capital. We have done this. If you are having the profits, that means if you are having these two, then it is going to be taxable dividend. Otherwise, it is going to be reduction of basis. In another sense, E and P is the corporation economic income. Current year presents the current year income on the annual basis. Accumulated represents the sum of the current years reduced by the distribution. E and P is not identical to the legal concept of the earned surplus. That means PAT and the accounting concept of the retained earnings. Although occasionally these amounts may be very close to each other, under these circumstances, there can be far also. Similarly, current is not identical to the PAT, or is accumulated is not identical to the prior years in that case. Current and the accumulated are treated as the two separate pools of the earnings. In this case, as a result, the corporation can make the taxable dividend distribution if you are having current year. In this case, notwithstanding in this case, see that notwithstanding the fact it may have a deficit in the accumulated. That means current year if you are having positive, accumulated if you are having negative. In that case, you can still make a distribution in that case. Would you need to adjust that? No. Although dividend is defined as a dividend coming from either this and this, which is current or accumulated in this case, distribution made during the years is deemed to come from current year. If the distribution is in excess of the current year, then what do we do? In that case, we follow it, whatever is going to be return of basis and capital gains. Do we need, I know the language is coming very, very complicated, guys. The good part about the exam is, guys, you don't need to cram the language. As far as what we have done in the class, in the terms of the sequence, in the terms of the charts, if you are okay with that, there's not even a single question you can't do that. Tomorrow, I'll do many questions with you, and I'm 100% sure there would not be in a single question you will not be able to do that. Okay, but make sure, guys, you are revising this, because this topic, I just want you to give just 15-20 minutes, not more than that, just 15-20 minutes give tomorrow, so that you will be able to retain it much better, because this topic is going to be very complicated. And tomorrow and day after, I have to add a lot of layering to this concept. You will understand that concept, what I'm going to discuss tomorrow and day after, only have you revised this point, because otherwise it's just going to be, your base is going to be weak, and I'm not going to build over anything on that. So please revise everything. I have 15 minutes. I can start a very small topic before we stop. Okay. Okay. Up till now, guys, whatever the taxability, what we discussed, right? Whether it is taxable dividend, whether it is taxable capital gain, whose hands am I talking about? In whose hand are we talking about taxability? Company? we were discussing everything we were discussing in the hands of shareholders. Everything we are talking about shareholder, guys, exactly what we are discussing here. Similar conversation you are going to find in the part 1 also. So part 1, I don't cover this topic in the part 1 because everything I'm covering it much more detailed in the part 2 also, and we are having a very limited time. So see, understand individual. What is the part 1? Part 1 is about the individual taxation. Individual meaning shareholder, obviously taxpayer. Individual means shareholder in that case. So automatically these things are already covered in this case, so there is no point duplicating that thing. This what we are discussing right now also, guys, it is also relevant for you for the part 1 also. From the part 1 it is relevant from a taxpayer perspective, you are absolutely correct, from a shareholder perspective. So exactly the same conversation we will utilize in the part 1 itself. Okay, now I'm going to discuss for next 5 minutes. I'm going to discuss with you about the company, guys. Okay, what does that mean? Can company give you assets, guys? Would that tend to amount to distribution? Can company give distribution in the distribution asset? Yes, you can give that. Yes, you can give that. Okay, asset, guys, could be of 2 categories. Okay, first asset I've already done with some people here. Depreciated asset, depreciated property or depreciated asset. What is the meaning of depreciated? Any asset on which you are charging the depreciation, is that the meaning of that? No, it's not the way we understand in accounting in the US GAAP. Whenever we discussed depreciated property, we basically means that your depreciated property means, correct, good, that your fair market value is less than the net book value. Fair market value is less than the net book value. That's a depreciated property. What is appreciated property? Obviously, appreciated property means whenever your fair market value is going to be more than net book value. What is depreciated property? Depreciated property means whenever your fair market value is going to be less than net book value. Guys, is the meaning clear here? Everyone? Especially for the people who are doing it for the first time. Okay. Company is giving asset, fair market value is 100, net book value is $80, guys. Appreciated property, depreciated property, AP or DP? Puneet, what do you think? AP or DP? AP. Very nice. AP, appreciated property in that case. Perfect. That means it is going to be a gain scenario. That is going to be the gain scenario for the company, guys. How much is going to be the gain? Fair market value $100, net book value is going to be $80. How much is going to be the gain? $20 is going to be the gain. Gain is going to be $20. Is the company going to recognize the gain? Absolutely yes. That means here there is going to be the gain. You are going to recognize the gain. How much is going to be the gain? Same, fair market value minus net book value. Okay. Company is giving the asset, fair market value is 100, net book value is 150. AP or DP? DP. Gain or loss? Loss. loss. But how much is going to be loss? Fair market value $100. Net book value is going to be $50. But whenever there is a loss, we don't recognize the loss. That means if you are having the loss here, we are not going to recognize the loss. Sounds unfair? Yes. Welcome to IRS world. So what they're saying, if you're giving any appreciated property, we are going to recognize that gain. If you're giving any depreciated property, you're not going to recognize the loss in that case. In fact, this scenario, guys, people who have done part 1, guys, I will try to correlate that with you. Part 1, if you guys remember, we have discussed the gift scenario also. We discussed the related party transactions also. Pretty much the same scenario we have done there also. That if you are giving the appreciated property, we recognize the gain, but you are giving the loss scenario. If you are giving the depreciated property, we don't recognize the loss. Ditto treatment here. In fact, this treatment, guys, you will find this treatment, what we are discussing here, you will find it across part 2, barring one situation. I'll cover that situation. Everywhere in the entire part 2, you will find it the same scenario almost. Gain, the government is taking the tax from you. If it is a loss, government is not giving you the loss in this scenario. Just the recognize of loss in that case. Okay. So in this case, gain, you're going to recognize loss. You're going to recognize the gain. Loss, you're not going to recognize the loss in that case. Okay. Now let's move here. Company is making the distribution, guys. Fair market value is going to be 100. Net book value is going to be 40. Two questions I have for you. What is going to be distribution value? How much gain is for the company? Correct. Gain is going to be $60. Distribution is going to be $100. Correct. Distribution is fair market value is $100. Net book value is $150. What is going to be distribution value and what is going to be loss or gain? How much gain or loss are you going to recognize? $0. There is going to be a loss of 50, but we are not going to recognize this. No question about the gain. Correct. And distribution is going to be $100. Absolutely correct. Let's make a summary here, guys. Let's quickly make a summary here. This side I'm writing company, this side I'm writing shareholders. Okay. So if the company is giving cash 10,000, what is going to be distribution value, guys? Cash given, right? Whatever is you have received the cash, that means 10,000. Correct. let's say company is giving the property for which fair market value is 20,000. What is going to be the distribution value? Fair market value 20,000. Correct. Okay. Company is giving the appreciated property. What is appreciated property? Appreciated property means whenever the fair market value is more than the net book value. What is going to be distribution value, guys? Fair market value, right? Fair market value. What is going to be the gain? This is going to be the gain scenario, which is fair market value minus net book value. Last scenario, company is giving depreciated property. That means fair market value is going to be less than net book value. What is going to be the distribution value? Net book value, fair market value. This is something generally people get confused here. Still fair market value. There is going to be a loss. Would you recognize the loss? No. Make this summary. I think the summary is going to be helpful for you. Done, guys? Okay. Guys, please revise whatever we have done, especially this appreciated and depreciated property. I need it very much tomorrow, right? So if you have revised this, everything is going to be very, very easy for you. So please revise this, because tomorrow and day after tomorrow, it is going to be very complicated topics. But if you have revised everything and if you have understood everything, there should not be any problem. If you have any queries, please post that on the group so that if I will not get a chance to answer that, anyone from on the students, anyone who has understood the concept will answer your question itself, right? So don't feel shy posting your queries. Ask as much as queries you want in that case, but revise this. This is something which is going to be a little tricky. So revise, and if you have any doubt, please post the queries on the group. Anyone will answer. If not, I'll take up that tomorrow evening itself. All right. Thank you so much for your time, guys, and I'll see you tomorrow. Bye-bye. Good night.